this week's economic update, our focus is on the RBA, who will be meeting for the first time in 2017 this week. In addition, they'll be releasing the February statement on monetary policy, which will give us a good overall view as to where they see the risks and also the likely outlook for the Australian economy as we move through 2017 and into 2018. Arguably, there are three key areas which we need to consider when we're looking at the outlook. Those being economic momentum in the economy, inflation, and also the labour market, which is a key focus not only for providing incomes to Australian households, but also in terms of sparking confidence, which really dictates how much they're willing to spend out of their ordinary pay packet. Starting with economic momentum in the Australian economy. Now, the big news we had after the last RBA meeting was that the Australian economy actually contracted by 0.5% in the Q3 last year. And that was actually released a day after the last RBA meeting. The most immediate sort of impact of that outcome will be on terms of the RBA's view is that they're likely to potentially think about revising down their immediate expectations for growth. That being said, they're still likely to remain quite constructive on the view for all of 2017 as a whole. Westpac's own expectation with regards to growth is that we're likely to see growth run at about a 3% pace through 2017, which is broadly in line with trend, or indeed a little bit above that. That's being supported by the consumer, public demand, and also net exports, which continue to add quite significantly to growth. Turning to inflation, there's a definite focus there as well. Now, in January we saw the release of the Q4 CPI, and that was actually a bit weaker than we had been expecting. It was also a little bit weaker than the RBA was expecting, and does emphasise the downside risks to their view that they're likely to see inflation firm back towards the bottom end of their target range through 2017. Key to the view in terms of what's sort of been driving inflation is really around housing, which we've seen rents be quite a disinflationary force, so it's pulling down the inflation rate overall. And in addition to that, we haven't seen as much pass-through from the Australian dollar as we would have expected to be the case, and which is suggesting that there's a great deal of competition in the Australian economy, and that's not allowing people to actually go and increase their prices as they might otherwise would have liked to. And all of that really points towards sort of downside risk to inflation and potentially the risk that we won't necessarily quite get back to that sort of 2 to 3% target range by the end of 2017. Finally, turning to the labour market. Now, back into 2016, we saw a fair degree of weakness as the employment outcomes came in well below expectations, and unemployment drifted up slightly higher to around about 5.7 or 5.8%. In addition to that, we actually had an increased degree of underutilisation of the labour market, where people couldn't get the full-time jobs they wanted, or indeed the number of hours they wanted on a part-time basis as well. Now, this poses a risk for the labour market, both in terms of confidence of individuals, but also sort of the incomes that they actually earn, and therefore their ability to go out and spend on everyday items. As we move into 2017, there is a great degree of expectation that we will see stronger jobs growth, but the most recent outcome was actually a little bit weaker than we had expected, and again it emphasises the risk that we won't see that acceleration in employment growth, and therefore that basing of income growth which we need to see to actually see a firmer consumer in 2017. In addition to these three key themes on the domestic front, there's also a great deal of uncertainty and anxiety on the global front as to what is likely to transpire in the global economy this year. Obviously, in the US, we have a great deal of uncertainty around Trump's policies. There was an expectation that he would likely lead with the pro-growth agenda, but what we've seen is there's been a balance that has been struck at the moment between that and also a more protectionist policy around trade and also immigration. And that has led to some anxiety in financial markets, albeit not leading to actual material falls in markets yet. But that all sort of potentially creates a risk around sentiment and people's willingness to actually go out and spend on everyday items. And all of this actually leads to sort of potential concerns around growth. In addition to that, from the domestic front, we also see that the sort of weakness we have seen in the labour market has flowed through to people's expectations around their family finances, which really does tend to dictate their willingness to spend as well. So both on the international and also on the domestic front, there are some key risks which we really need to continue to assess as we move through 2017 and indeed into 2018, whether there are further risks around the housing market, particularly residential investment and its contribution to growth and employment. Finally, extending our thinking about the risks, as I mentioned there, that residential investment is potentially a downside risk in 2018 more so than 2017. And this really highlights more broadly about the economy that the overall risk to growth and indeed inflation are arguably larger in 2018 than they are in 2017. This needs to come into the minds of RBA thinking now, because generally it's thought that policy works on a sort of 12 to 18 month lag. So as we move through 2017, if there is that sort of risk that growth will disappoint and they're starting to get more concerned about 2018, that is where they'll likely sort of start to talk about thinking about incorporating a more of an easing bias into their statement, and also they might outright start to talk about the potential need to actually cut rates further. Our expectation at the moment is that's not likely to transpire, and that growth around about trend both through 2017 and 2018 will keep the RBA firmly on hold. But this is definitely the risk that we need to continue to focus on as we move through this year. In conclusion then, there's going to be a lot to discuss and consider as we move through this year. As the data rolls in and market expectations change, we'll continue to update you each week. We'll see you next week.